Okay, so let's look at a couple of investment opportunities for those of you who missed out on Apple or Tesla stock split. Now, mind you, you haven't actually missed out yet. Tesla was up to $2,129, and then it fell back down due to sales to, what is it, 1991 right now, right? You haven't actually missed out on Tesla, and you haven't actually missed out on Apple. The problem is, if you try to buy in now, it's going to cost you a hell of a lot more than it would have cost you if you had bought in when I first started talking about this. What was it, two or 3 weeks ago? I think it was. So Apple is $503, and divided by four, it's going to cost you $125 per share. That's not too bad, but the thing about it is, if you had bought it, 2 weeks ago when I first made the videos about this, if you had bought it that Monday, it would have only cost you about $100 per share. Actually, I think it would have cost you a little less than 100. Tesla is $1,968 right now. So $1,968 after the split is going to be divided by 5. It should be, if it were to split right now, it would be $393. That's still a hell of a lot of money. So here's the thing. What happens if you don't have a whole lot of money to invest in Apple or Tesla? Well, you have to understand, a lot of investors are pulling their money out of other assets, and they're putting their money into Apple and Tesla. So I'll tell you like this. Apple is going to end up being a $3 trillion company, and I don't even think it's going to take a full year for it to happen, because they're already up to $2 trillion right now. Tesla, I believe, is going to be another $1 trillion company. I absolutely believe it. They're going to suck in so much investment from this. Once they do this split, they're going to suck in so many new investors that, yeah, I really, really believe they're going to $1 trillion. I don't think it's going to take 2 years for them to get to $1 trillion, but I know it's not going to take Apple 2 years to get to 3. So anyway, real quickly, let's talk about a couple of other opportunities you may have missed that are still possible. Goodyear tires. Now, Goodyear tires suffered, first of all, over the last 6 months. Goodyear tires, you take a look at their long term. Goodyear tires was doing pretty good. But what ended up happening was, in March, just like everybody else, Goodyear tires suffered the same crash that everybody else suffered, right? Recently, they dropped below $10 because you had to deal with this stupid bastard Trump, who was talking shit about Goodyear tires not either printing or allowing people to wear those stupid red hats or whatever. Some nonsense bullshit. It's always some nonsense bullshit out of this idiot until we get rid of him in November. But anyway, Goodyear tires suffered a little bit because it was some sell-offs. But the simple fact of the matter is, Goodyear makes very, very good tires. I'm not worried about Goodyear. Goodyear will be fine. Now, Goodyear over the last year, if you take a look at them over the last year, Goodyear was trading at, what is this? I think their high was around $16 or $17 based on this. This is not a very accurate one, but it says their 52-week high was $17.20. So that means that right now, even though they're not as low as they were at $5.10 in March. This would have been a really nice thing to buy then. But Goodyear has some gains that it can make, and it also has a dividend that it pays of 6.75%. So that's a pretty good opportunity, especially if you're looking for long-term investment. And they're relatively low right now because you can get 100 shares for less than $1,000, 973 or 973, I should say. $9.73 per share. That's not a bad way to buy in. Also, there is KNDI. KNDI is a Chinese company making electric cars, and right now they're at $6.70. That means that you can easily get 100 shares for $670. Why Kandi Technologies flop? Well, the problem is everybody's pulling their money in order to invest in Tesla, because the problem with these stock splits is it's like a funnel. A stock split causes these funnels, which sucks up all the other money from everything around it. And Kandi is going to put out these ugly ass little electric cars. But one thing you got to remember is, In countries like India, countries like China, a lot of Southeast Asia, if you go to any of these countries that very small island nations, cars like this are going to be the new big thing. Oil and diesel product importation is problematic, and during these times of storms and global problems, it's like unreliable. Electric is going to be the big thing in most of these places. Now, those places also don't have very large cars. Most of their cars are relatively small. Like, they're all econo boxes for the most part. Like Kia Souls, for example. A Kia Soul is like a luxury car if you go to certain places. These cars are going to do well, and they're going to do well in China, and because of the low price, China's trying to put these things on our streets for less than $15,000. Now, most of these people who are suffering from student loans and, all that, the debt that they have, they're not going to be able to afford these 20 and 30 and 40 and $50,000 cars. They're just going to be lucky to have a car whatsoever. So, Kandi, I would say, I'm calling Kandi, Kandi. I believe, especially at their current rate of $667, that they're worth buying in. Problem is, their energy is getting sucked out of them by Tesla. Nobody's paying attention to them right now. They rallied at $17.40 not long ago, but they're back down to $6.64. So if you haven't already bought in, I would say you buy in, because the thing about it is the Chinese market is bigger than the American market. The Indian market is bigger than the American market. There's a lot of opportunity there. NIO is still $14.53. Now, one of the things you got to understand about NIO is they're selling their cars right now. China, right now, they're selling these cars. It says they're up 240%. Now, this was August 21st this year, and the company is revamping plans to go global. There's going to be a lot of competition. And I remember when China was starting to put Chinese-made cars here, like, for instance, the Cadillac CT6 Hybrid was Chinese-made. And there's been a lot of cars that were made in China that quietly made their way onto the American market. But I think the electric cars gives them a better opportunity to get onto the market, because one of the things you got to understand is most of our equipment is made in China, and because of that, they have a better opportunity to push their vehicles. And their vehicles don't look terrible. Like, I mean, this doesn't look bad compared to, say, one of those RAV4s or a CRV. And if it's all electric and people can charge and plug it in, as long as their battery technology turns out to be good, and as long as their charging technology doesn't set anybody's house on fire, I would say that NIO is going to end up being big. Now, how big? Nobody knows. But the thing about it is they're making their moves now, and right now is the time when you can get in on it. I used to, constantly talk about, when I got into Tesla, back when I got into, Tesla was 2012. Nobody even really knew about Tesla. Nobody had tested their cars. Nobody had driven their cars. Ludicrous mode didn't exist. Nobody knew how fast they were. When I drove one of those cars, the P85, I believe, I was like, I want to invest in this company. Because I was like, this is going to be big. These electric cars, Europe has already said by 2040, they're trying to replace gas cars. And by government mandate, that becomes possible. So I really think it's coming, and you have a chance to get in right now. I got into Tesla when it was $30 a share. Right now, these things have an opportunity to be bigger than Tesla, and they're lower than $10 a share in some cases. Now, GE sold off their light bulb making factories, but GE is still a military industrial complex, so that's a good opportunity to get in if you want, an electronic manufacturer for America that has ties to the military industrial complex, because they make money. There's also Workhorse. They make trucks. So let's take a quick look. Workhorse makes trucks that are coming soon. So as you know, there's the battle for trucks is going to be big. This was 4 hours ago. This story was 4 hours ago. So they're talking about them. It's just that you don't hear a lot about them, because right now Tesla, if they're talking about Tesla and Apple every single day, they're sucking the energy out of the market. Workhorse, they got these trucks coming right here. You should do your research, but Workhorse is still affordable, I would say, at $15.85. They're still affordable. I should also point to the fact that Airbnb is about to try to launch an IPO, and I want to have some money ready for Airbnb. Airbnb, we already know, is profitable. Airbnb has long-term stability because, people want to travel. I tell you, after this year, a lot of people are going to want to travel. They've been stuck in the house. They've been stuck with their families. Some people are plotting divorces because they just found out that they couldn't take it. But Airbnb, when the travel industry gets back on its feet, Airbnb, they're going to make some money. Now, it says, is Airbnb currently profitable? Not currently. Airbnb generated $4.8 billion in revenue, claimed it was profitable on an EBITDA, earnings before interest, taxes, depreciation, and amortization basis in 2017. But it lost $322 million during the first 9 months of 2019. And then because of the pandemic, you already know that they were going to be down. So I don't even care about the fact that they weren't profitable during 2020. I totally understand that. Thing about it is, even if they don't end up paying a dividend because of short-term non-profitability, that doesn't mean that you can't make some money on the stock itself. So I'd be on the lookout for Airbnb. But that's just what I believe. I mean, there are a lot of opportunities. While everybody else is buying up these really big companies like Apple and Tesla, there are a lot of opportunities. Like, for instance, when it was only $50, I was telling you to get into Logitech, and it was $50, I was telling you to get into AMD. AMD is at $83 now, and Logitech's is $20 more than I told you to get, $24 more than I told you to get in. So you got to also understand, just because you have a few companies sucking up all your attention, that doesn't necessarily mean you have to fall for them alone. There are lots and lots of oil companies. Energy is still trying to make its comeback. And then there's cruise lines and airlines. Cruise lines, Carnival is still a good buy at $15, even though it's low as $7.80. But obviously the cruise ships aren't moving right now. Obviously nothing's really happening right now. Thing about it is, you want to get in while they're low. I would go after the electric car companies before going for cruise lines. Airlines are still getting their asses whipped because obviously there's very few planes flying. Obviously the pandemic is still hurting them. Airlines are still worth getting into for the long term, but for the short term, no, you're not going to make any money in the short term. That's the bottom line. Few of them are still paying their dividends. Air YY, Chinese Airlines, Jets Index Fund, and CEA, so they still have some dividend yields. The rest of them don't seem to be paying dividends. Delta, for instance, used to have a dividend yield, not right now. United Airlines doesn't have one. United Airlines is down about a third from its high. So, yeah, nothing there. But, again, got to do your research before you make any investments. And I'll also say this. One of the things I did, I always thought it would be funny if they had a House Hunters. Like, if you watch Home Garden Television, if they had a House Hunters for New York City properties, because I want the world to see how little you actually get for how much money you're spending. And people seem to like the last open house I did. I think I would probably want to do another one, but I'm going to only do them based on houses that I'm seriously looking at with the possibility of buying. If you are investing in houses, you kind of don't really need the stock market, because if you're investing in houses with the intent to rent out those houses, chances are you'll actually make more money than you would in the stock market, because you got the real estate and people need to live. And if you've got tenants, you'll make more money off of them probably, because you got to remember, these stocks only pay a dividend, once on their dividend date. But when you're dealing with tenants, if you're able to rent at a profit, you're going to get a little bit more money every single month. So real estate is actually the better place to be putting your money. I know a lot of people are trying to get pushed into tax-deferred annuities when they start jobs. My thing is, a tax-deferred annuity sounds great and everything, but the thing about it is I have a better opportunity to store money in my houses. And when you have two houses and you're renting out one and you're making a profit, That's easier money, I would say, than having to worry about the stock market. A lot of people are taking their money out of their savings accounts and putting it into the stock market because they're disappointed with the fact that they're not getting anything out of their savings accounts, and they want to get at these dividend yields. And I totally understand that. The problem is you have no idea what the future of coronavirus is. You have no idea how many economies are going to suffer, how long they're going to suffer. You have no idea. You have no idea who's going to be the president next year. I believe it's going to be Joe Biden, but until it actually happens, we just don't know. Corporate tax loopholes may be cut. If that happens, a lot of this inflation that we're seeing in the stock market is going to disappear. Values won't be as high. So my bottom line is you just have to prepare your money, and you have to be ready to get in when you can get in, where you can get in, and you just hope that from that point the market rises. Like, for instance, I have a lot of shares in marijuana, and they haven't really moved because obviously Trump is president. When Barack Obama was president, marijuana was making some serious moves, although they don't really talk about it. But a liberal or Democrat administration is more friendly to marijuana, especially when it comes to medicinal marijuana, than these Republicans are. Because what the Republicans are doing is they're quietly getting their people into positions to buy the stocks, so that this way, once those marijuana stocks finally are attached to legal marijuana, they'll be able to profit. And all the while, you'll be like, well, why did y'all bother keeping this illegal for all of this time? Aside from the obvious racism of them being able to hassle black and brown people and be able to say you're illegally carrying marijuana and ticketing blacks and brown people and being able to have opportunities to jail them. The white kids in Denver and Seattle and California, they're not having these problems right now. And that's the simple truth. So anybody who has a problem with what I'm saying, that's your problem. But as I was saying, if you get into the positions of these things while they're inexpensive, just like these Republican scumbags who've been keeping it illegal, you too will be able to see some profit off of it. There's a huge racial aspect that's infecting politics. And even right now with this election, it's sad to see that there's such a racial divide in the country that pretty much affects everything we do. But the bottom line is the people at the top have figured out how to profit off of it, while the people on the bottom are the ones actually fighting. So all I'm saying is there's nothing wrong with these small cap stocks, especially when it comes to these marijuana trades. The thing about it is you don't want to invest too much money, and you want to get them as cheaply as possible, waiting for the inevitability of them to start making money. Now, there were two stocks that I had bought recently. One was MCOA. I don't know if I have that here. So one was MCOA, and the other one was MJNA, Marijuana Company of America. So this one is Marijuana Company of America, MCOA, and I just bought this one. I got this cheap, though. Right now, it's 0.014. So that 0.0014. I was easily able to buy 100,000 shares of that because right now it's basically at the bottom. Then there was MJNA. MJNA is 0.014. It's almost like they're mirroring each other almost. You got one that's 0.0014. You got another one that's 0.014. But anyway, these things have basically bottomed out. And I'm not telling you to get into them. I'm just telling you my positions. But the thing about it is I bought this when it was a little bit cheaper, because you'll see if you look at its performance over the year, everything basically bottomed out here in March, but as you can see, it's been coming up since March, and it hit its high at 0.030 May 28th. Now, right now, they're still basically bottom dollar. What I need is a president who allows marijuana sales and CBD and all that stuff, cannabis sales, hemp. And once that happens, I could easily make $1 million, easily, maybe more, off of all of the medical marijuana and all of the attachment companies that I've bought. So I'm not going to say it just yet because I have to keep my fingers crossed for what happens in November. But the bottom line is I'm buying as cheaply as possible, and I'm waiting for the things that I'm buying to appreciate. It took me a while with some of them. BLOZF took me a while. I mean, it went from the 15 cents I bought it to, what was it, like $3? No, $2.98, almost $3. But it takes time with some of these things, especially when you're dealing with presidencies where the policies change the way the companies are operating and the amount of money being poured into these companies. So those, the politics are very, very important. But basically, that's all I really wanted to say. So that's about 20 minutes worth of advice. So free advice, I should say. But that's that. So good luck. And if you have any comments, you can leave them in the URL section.